Tuesday, May 30th, market analysis, Stan Ehrlich, good morning, 10 o'clock California time. And I always start out with the indexes, as I will this morning. S&P 500 usually first. Now, we've had new highs for a couple of days. At the moment, the spider is up a half a point, which is hardly anything. And it gapped up this morning into and above some resistance, but it didn't stay there, and it's dropped back down to unchanged or a little lower a little while ago on the day. The only thing I do not want is a bearish engulfing. That could become dangerous. Otherwise, minor dips along the march to higher levels is very normal. That's basically what we've been seeing for a couple of weeks. So we could have a little bit of a dip. Now, we're not overbought for the spider at this particular point. And when we get to the DIA, we're not even up to 50, frankly. Very neutral territory. But the QQQs are a different story completely. Talk about that in a moment. So resistance stopped the rally, went through it very slightly, but it stopped it, and we're pulling back to a half a point higher. Slightly higher close is just fine. Up a sizable chunk would be just fine. And I'm expecting to see higher levels again and again next month. There's no major resistance level except for this last one, which is fairly broad, 424 up to about 430 and 433. We'll see what happens when we get there, which I think we will, and that's not going to stop it. I'm still looking for this bull market to be a new historic high ground by the end of the year, period. I like what I see. Just no major bearish engulfings. The only thing I'm concerned about, not really. Okay, let's look at the DIA. The DIA is having the most trouble. It's got overhead resistance, and quite a bit of it, actually. But we were almost oversold, as a matter of fact, just last Thursday, and at a support level, which I pointed out. And there's a chance that there's a bottom formation forming, a large head and shoulder. The first shoulder would be just middle of December, and the head would be March 15th. But problem is, these patterns are usually at the bottom of a bear trend, not developing during a bull trend as an interpretation of some sideways trading range, which you got to agree, the timing is good, the price levels are right. The neckline would be almost flat, downward slanted slightly. I'll draw on the details and the days and weeks to come if it continues to look like a head and shoulder is actually developing, because there's lots of elbow room here and a big upside objective still to come. But it's too early to be very certain about that. And let's go to the QQQs. Right now up 260 on the day, and again a new high ground for 13, almost 14 months. It's got a small gap to close. I think the last gap of any significance whatsoever, and that's a fact and correct. So if it can muster one more shot up, it'll get even more overbought. That's my major concern at the moment. Deserves a downside correction. Second day in overbought territory, not severe overbought, but low 80s, and that's pretty high. When we get to these levels, in the past, which was a couple of weeks ago, we had a couple of days down. It's not going to change the bull trend. In this case, we've got a gap to close last week. So there's a chance that we could come down low enough to close that gap at 330, 380, let's call it, and then turn around and go back up. To me, this gap looks like it's one of those rare ones that I would say has a chance of not being closed. But we'll see. Remember, gaps are like black holes in space. They tend to suck the price action back into them, and that's what usually happens. Okay, futures. The S&P 500 is also the E-mini because it's an index and a futures contracts. And almost everything that I say about the spider applies to the E-mini, but remember the trading hours are different. Therefore, you get some slight variation on patterns and signals. So the high, yesterday's abbreviated trading time frame and today's are the same. So it's not a bearish engulfing. We were not overbought also. So minor downside correction seems to be potential, and then turning around and heading right back up. We might come back down to, I'm thinking, 4,176 ballpark for the ES. The next chart is interest rate futures and bonds bounced right off of that support line, which was great. I talked about that line days before we came down and tested it on Thursday of last week in oversold conditions, and boing, just like you would expect. And it did, it has. So we're up to new highs now, a likely new high close for a little bit over a week in just the last couple of days, basically. Excuse me. And the next level of resistance is going to be around 129. I am expecting it to go through this, back into this trading range, and maybe in the next 1 to 2 months, maybe even sooner than that, we're going to see 134 plus, and well, 135, I should say, plus. And that'll be a major bullish breakout, and that's exactly what I expect. That's what I'm forecasting. That's what I'm looking for. The lows we saw last week in oversold conditions and testing the trend line look excellent for a fail-safe sell stop on a longer-term trade. That would be a stop in the ballpark of, well, yeah, around 125. And that's it. Now, for 10-year notes, we're getting the same exact thing. Good support the last couple trading days and a very strong rally out of oversold conditions, and same commentary. We're up to a little resistance already, but the more significant resistance is 115 and higher, and then to the moon. Next, we have crude oil starting to break down again. There's a joke there somewhere. Break. Okay, so new low and a new low close likely for the last couple 3 weeks. We have the support area that it's been established to potentially bounce off of. Depends a bit on how quickly we get down there, and I do think we're going there, and we're not going to hold anymore. Triple bottoms are fairly rare. Double bottoms aren't. And there's a chance of some other formations developing as well. So when we get down to 64.5, it's going to be very important as to how it behaves, and I think it's just going to drop through it and keep on trending lower. Next, heating oil. Same kind of comments, but it's profound. In this case, it'll be a new low for a year plus when it breaks this yellow support line. So we have a new low almost, but a new low close possibly for the last 2 or 3 weeks, just like crude. We'll see what happens. I'm looking for lower levels, still bearish. This next move down could be very spectacular because of the major downside breakout. And natural gas gave us a sell signal on Wednesday of last week. We have a new low again and a new low close likely since our sell signal, which has worked out just great. And it was only a few days after overbought conditions. Even this buy signal worked out very nicely. It lasted only a week, but my buy and sell signals, the red and the green lines, vertical bars or candlesticks, doesn't matter. We do turn our custom candlesticks red and green the same as these vertical bar charts. They're meant to be originally intermediate to relatively short-term swing trading signals, but you have seen many signals that are profoundly important for major tops and bottoms. I can't tell if that's going to be the case necessarily at the time they happen. Sometimes I can, and I did on October 13th last fall for the October lows and the bottom of the bear market of 2022 and the beginning of the 2023 bull market we are in for the stock indexes. Anyway, new low closes seem likely immediately, and great. Sell signals working. What can I say? Next, we have a brand new buy signal in gold. Now, that's changing the situation. I was looking for lower levels in general, maybe even coming down to 1,850, but the trend is up in general. And there's no intermediate or longer term sign that the trend has changed. Now we have a buy signal as the market may be stair-stepping its way, and this is the bottom of this stair step, so to speak, ready to turn into and challenge the highs for the whole trend and get back up to 2,100 plus. So I have to turn bullish. We're getting a green ER buy signal today. Market got nicely oversold a couple of times in the last week and a half. That's it. I'm bullish, looking for higher prices. Watch the green dot for the next few days to see if we can touch that to add to this ER1 we are now long today when it went above Friday's, that is, high. So we have a small profit in the trade already. Let's see what happens. Bullish on gold. Do we get any corroborating information out of silver and platinum? Next chart is silver, and heck yes. We had a bullish engulfing on Thursday of last week, and it could very well be the beginning of a big rally. Not only that, come on, people. I've been talking about this phenomenal signals for weeks now. We had a bearish engulfing on both highs of a double top formation, which had the highs at almost exactly the same price, and a quote unquote complementary, if you will, sell signal to precede by only one day the big breakout to the downside. Boom! Measuring the downside objective on the double top, you come up with this price level right here, 22.97. Should probably be close enough for government work. No offense. Now, we got there last week in an oversold condition, and the next damn day we had a bullish engulfing. How good can it get? Only if this signal works. We did come down to the green dot. That's an ER3 new long position. ER1 is still long from, of course, last Thursday. So now we have two. Our protective stop is going to start to move up immediately, and it might even be moving up today already. I'm not showing you the ER3 strategy on these charts. Next symbol is platinum. Well, we have an outside down day. That's a bearish engulfing normally, but we were almost oversold today and Friday and also on Thursday, and we were definitely oversold on Wednesday of last week. We don't have any lower lows. I think this is a backwards bearish engulfing and is actually bullish. And I think this market is going to turn right around and start to head north immediately. This could be a very, very low risk, using a stop where my horizontal line is, buying price level. Very, very small risk. What have you got to gain? What have you got to lose? You got very little to lose. And if we're right about this, you're on the right side of the market on the smack dab bottom of the break. It's very gutsy. Hey, that's up to you. We did have some good signals recently. We had a great buy signal here at the bottom on February 27th. And you know that all three, silver, gold, and platinum, we picked the lows in February, March, all three of the precious metals. All three of them. Next chart. Natural gas. Tierra del Fuego, heading south. So, minor new low from last Friday. Bear trend. Buy signals have not worked. lately in high grade. That was a fantastic one back here, September 28th, 22. So bear trend, looking for lower levels, looking for new lows, likely to come back down to approximately 3.3685-ish in the next week or two. Next chart. Soybeans, bear trend, got oversold, alleviated the oversold condition by going sideways to up a little bit, and kaboom, new low close to the trend. I think we're going to break below this support area, which is quite old, July of 22. And that would be a very significant major breakout to the downside. So I'm looking for significantly lower levels. I would not be surprised to see 1150-ish in 1-2 months. Next, soybean oil, same story. Buy signals didn't work very well. They did work a little. You had an up day and plenty of elbow room to make some money. It didn't last long. Remember, I said these are built for originally swing trading, short-term positions, scalping, or maybe a few days or a week or two. They're not originally built to pick turning points like December 12th of 22, the bottom of a very big break. But the signals do pick major turning points often. I just don't know it at the time. Sometimes I do. Next chart, looking for lower levels here. We are in a new low and a new low close in soybean meal, likely today. But hey, we're oversold. Just a moment. Let me get a little update on that. Oversold. And I expect to see the lows that we caught with a buy signal at the bottom to be challenged pretty soon. That's going to be 370-ish. Next chart. Corn, oversold last week and a couple days before. Rallied very nicely right into a general area of resistance, and today down the tubes. So I think this is the beginning of the next wave down, and we're going to see 550 broken back into the 540s and lower very soon, 1-2 weeks maybe. Next. Well, wheat's already done it. New low close likely. Looking for lower levels. Don't see anything stopping it at the moment of any consequence. We're getting pretty low though. We could be close to a low if we get oversold the next day or two because of old support on that incredibly good buy signal. May 13th of 19 caught the bottom of the market. Looks like we have another one smack dab on the bottom right here as well. So there is some historical support. I'll keep a close eye on this. Yeah. Okay. Next chart. Through the moon, overbought again, live cattle. Watch out. I keep telling you, never chase a market up buying more because you're making money with the positions you may have had for a week or two. You're pyramiding in the wrong direction. So this is the time period to lighten up on longs. Take some profits if you've got multiple positions. Looking for a minor high very soon and a modest downside correction, probably back to 63, 64 area. Yeah, next chart. Hogs, pretty much the opposite. Oversold, starting to rally, possible rally up to 85, give or take a little, in the next few days, and then down, down, down. Next chart is OJ. Got overbought. Talk to you about not chasing markets. All of a sudden, kaboom. Not surprised, but we already are coming back to the first level of support. But there's a chance he could dip off even more. I don't know. There may even be a tiny gap. I'll have to check that out at 269.25 area to be closed. That would be interesting. Next chart. Bearish engulfing on Friday in cocoa. We did rally enough to get short on the retracement. It looked like a small head and shoulder top was forming. The problem with today is you were on the opening below the neckline, and then it rallied above, which is a no-no, above the neckline, and it's staying there for the moment. Certainly you're not supposed to close above the neckline at all, let alone get there in the first place. And you're supposed to stay below, keep below, and start trending right away into new lows, which we're not doing. So the bearish engulfing signal, ER sell signal, looks okay, but the pattern that we're having is now a little iffy. So we'll see if this signal turns out to be good. If it does, from last Friday, then we'll see it start to drop right away. And some parts of today are just a little on the stronger than expected side. Bearish, looking for new lows in cocoa, and the sugar, the sweet. Tried to break out to the downside on Thursday of last week, looked successful, but all of a sudden it pops right back up again. Notice it came extremely close to oversold, but not quite. The rally seems to have spent itself today earlier. A little resistance is right there. So minor new lows in this bull trend would not be a surprise. I'm looking for buy signals at lower levels. Hopefully we get that down to 23.5, 23 area quickly. We'll be oversold also, and that would be a good place area to potentially have a new long buy signal. Next chart is back to E-mini. Have a great day. Thanks for listening and watching.